Welcome to this week's market drama. We'll begin with the S&P 500, which was up 1.3%. Nasdaq was up even more, 2.4% for the week. Nasdaq's up 14% year to date. S&P's up 12.1%. S&P actually hit a record intraday high of 5,375 for the index on Friday, and had a record closing on Wednesday of this week. Right, so markets essentially at all-time highs. And that is despite the fact that when we look at the payrolls number, is not necessarily what you would want to see, right? So we had average hourly earnings growth going up at 4.1% year over year. The expectation was 3.9. Why does this matter? When wage growth is fairly sticky and remains elevated, that's not a good sign for inflation. Remind everyone, if inflation comes down, the Federal Reserve could lower interest rates. So higher than expected average hourly earnings growth is not what you want to see. And then payrolls were hotter than expected, better than expected, 272,000 jobs versus 190,000 new jobs. But the unemployment rate went up more than expected to 4%, and labor force participation decreased to 62.5%. You don't want to see that combo of higher unemployment rate with lower labor force participation rate. So we are starting to see the labor market go from too hot to slowly starting to deteriorate, but unemployment rate of 4% still well below historical averages. So no need for huge concerns yet for recession. And as I've said in the past, as long as the earning picture continues to deliver, I believe the markets will continue to focus on that, as long as inflation is not reaccelerating significantly, right, and changing kind of the picture for the Federal Reserve. This coming week, we have CPI inflation data for May. Core CPI is forecasted to go up 0.3% month over month. If we see a larger print of that might scare the market. If we see it kind of be in line, it shouldn't change any of the picture. We also have the Fed's FOMC meeting. They're expected to hold steady rates at 5.25 to 5.5. We'll see what kind of messaging there is regarding future interest rates. But the market's no longer pricing interest rate cuts until late fall to this winter, right? So far, the market seems to be pricing that. We'll see what new information we gather next week. That's it for this week. Stay tuned for next week.